afternoon. This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation. All Bitcoin, all the time, and I'm your host, Christine Lee. All right, Bitcoining coming down from this morning's highs. The XBX Bitcoin price right now trading pretty flat at about 55,374. According to trade block data, the XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. Taking a look at the day's top stories, Bitcoin jumping this morning after Tesla CEO Elon Musk tweeted, "You can now pay for their electric cars with Bitcoin. Crypto payments won't be converted to cash. Rather, Tesla will add to its $1.5 billion stash of Bitcoin, and the electric car maker is also running its own Bitcoin nodes." Very bullish news. But Bitcoin traders are also bracing for a record $6 billion in options due to expire on Friday, leaving a bit of a bearish overhang on the market. Traders are handicapping the odds of a plunge to about $44,000 by the end of the week. Finally, trading platform Abra is lending dollars for your crypto as collateral. Abra Borrow will initially be available in 35 U.S. states as well as globally, and the platform claims to already have 1 million users. And joining me now with more from Mountain View, California, is Abra CEO Bill Barhydt. Welcome, Bill. Thanks for joining us on the show.
Yeah, always a pleasure. Good to see you.
Yeah. So Abra Borrow, how does it work? You're borrowing in dollars, correct? You're paying back. You're being paid in dollars, but using crypto as collateral. Is Abra holding the collateral? How does it work?
Yeah, sure. So we have lots of people who are effectively depositing Bitcoin, Ethereum, Litecoin, Bitcoin Cash to earn interest on those deposits. And also they want to access the gains, but a lot of times they're concerned about not paying capital gains, for example, but they might want to make a down payment on a house or buy that Tesla you talked about. So now you can actually borrow against your Bitcoin and Ethereum holdings in US dollars without actually paying taxes because it's just a loan. The interest rates depend upon how much of your Bitcoin you want to use as collateral versus how much you're borrowing. And that's it. So there's no credit check. There's no extra qualification check. As long as you have the collateral on Abra and you're in a state or country where this is allowed, you'll be approved in a few seconds. And then within 24 hours, you'll have your USD deposited as a stable coin in your Abra wallet, but then you can withdraw it to your bank account via bank wire or ACH, or even withdraw it as crypto.
You mentioned that Abra keeps the collateral on the platform while the borrowing happens. Is that how it works? And how does Abra make money in that business model?
Yeah. So we do borrow, we do lend some of the collateral. Some is kept on reserve and some is lent out. That's how we make money. Generally, this is all kind of collateralized lending, meaning when we lend out that collateral, it is then exchanged for more USD, usually as collateral. So the consumers are protected by that, as well as the fact that there are significant reserves in the system. And this is how we manage as well.
Rates start at almost 4% annual percentage yield with loan terms from 6 to 24 months. Does that mean that you're paying back 4% in APY, or does that seem a bit high? Or, I mean, I see mortgage rates around like 2%. So,
yeah, I mean, it's crypto, right? So you have to kind of get the banking system out of your head. The way we pay interest has nothing to do with the banking system. The way we set rates has nothing to do with the banking system. It's a function of supply and demand and what it costs us to run the business. And right now, 4% for the kind of LTV we're talking about is based on what we've seen, a very strong rate. As a matter of fact, I think it's one of the best consumer rates that doesn't involve some third-party token in the entire business. So we're really happy with the launch rates, and I actually hope they get better over time. But so far, the response has been these rates are really good. So.
Okay, let's talk a bit about Bitcoin. We saw some bullish Tesla news versus some bearish news coming in with that 6 billion options expiring on Friday. What's your outlook on Bitcoin?
So look, we're clearly in a bullish uptrend still. right? We've made higher lows as we go, and we're making higher highs as we go. But the fact that I'm seeing some bearish sentiment actually, historically, from a technical perspective, is fantastic because it creates a floor on price. When you start to see no bearish sentiment, that's when you get a capitulation to the upside. In other words, everybody is on the bus and there's nobody else to get on the bus. And that's when you should worry. When you have an uptrend and you have negative sentiment underneath it, you have a floor in price. And until that negative sentiment gives way to a positive capitulation, the uptrend will continue. And at least that's my opinion. I don't give investment advice except they say what I do. And right now, I believe that we're going to see significant upside to Bitcoin in the coming weeks.
Well, I've been paying attention to Money Matters, your broadcast on YouTube and other platforms. You've said that you're getting a lot of inbound requests from institutions, speaking to 5 to 10 institutions a day. How do those conversations play out? What are they asking and what are you advising?
Well, it's playing out in long working hours because I still have to do the rest of my job, even though I'm talking to a lot of institutions now. But I love it. I mean, the amount of interest that we're seeing from people who had no exposure to Bitcoin or didn't really even know what it was a year ago, it's just awesome. And so now we're seeing a combination of individual executives who were already long Bitcoin, but are saying, what should my company be doing now? Right? Should I be long Bitcoin? Should I convert to stable coins as part of my treasury and invest in your high yield product because I can earn 10%? How does that work? So we're seeing this gamut of what should my exposure to Bitcoin as a mid-sized company be to, should I be putting money in a high yield product earning 10%, even if I don't put all of it in like 10%? Explain to me what that range of deposit volume versus risk looks like and how, Abra thinks about it, because we manage our own money the same way, right? Our profits are generated in Bitcoin and most of it we don't sell except to pay our bills, which we have to pay in fiat. And that works well for us.
Okay. And I want to mention, I saw that you noted that you recommended that corporates put about 1 to 5% on the balance sheet, which I found quite interesting. Finally, Fed Chair Jerome Powell has been downplaying, or you say has been downplaying inflation risks. The FOMC estimating that inflation will reach about 2.2% by the end of the year. But you've been saying that they're underreporting inflation. Tell me a bit about that, because Bitcoin is often, promoted as this hedge against inflation.
Yeah, I think it's worse than underreporting. I think they're purposefully being not only careful in how they present this, but to a certain degree misleading, because they want to be the last people to admit that there are inflationary pressures. They are incentivized to not admit this because they have to write larger Social Security checks. They have a whole bunch of other expenses that go up as CPI goes up, at least the way they measure it. And the way they measure it is no reflection on reality, as far as I can tell. I mean, I've been at this for a long time. I worked in fixed income at Goldman. I kind of get how things work. And I'm really worried about how they basically are lying. I don't want to just say like they're liars, but the net effect is they're not telling the truth, because I'm not like a macroeconomist as a day job, and I get it. And I spend a minimal amount of time looking at what the data and what's really going on. And it's pretty obvious to me that in a lot of circles in this country, prices are going up much, much faster than what they're letting on. And I really believe they're going to be the last ones to admit it.
Very concerning if that plays out, as you say. Bill, thank you so much for your time. Appreciate your insights and coming onto the show.
Always a pleasure. Great to see you. Thanks for having me.
All right. That was Abra CEO Bill Barhydt. Coming up, more BTC markets analysis with CoinDesk Director of Data and Indexes, Galen Moore. Welcome back. Time time now for the chart of the day. Deutsche Bank saying 52% of its investors expect Bitcoin to be below $60,000 in 12 months' time. In fact, Deutsche Bank's investor clients mostly see limited upside in Bitcoin this year and expect a decline towards $20,000 to $40,000 1 year from now. But in the near term, the sentiment is quite bullish, with about 1/3 believing Bitcoin will rise to $60,000 or $80,000 in the next 3 months, and about 25% believe Bitcoin will rise above $80,000 in the long term. This is according to a Deutsche Bank monthly market survey conducted March 18th to 22nd with over 500 market professionals around the world. Only 23% of the respondents, though, saying they had ever bought Bitcoin for their personal investments, most of them under the age of 35. Bitcoin has been trading in a sideways range over the past week after failing to sustain an all-time high of around $61,000 reached earlier this month. And joining me now to discuss from Boston is CoinDesk Director of Data and Indexes, Galen Moore. Always a pleasure. Welcome, Galen.
Indeed. Thank you, Christine. Always a pleasure to be here.
Yeah. So Deutsche Bank clients in the near term see Bitcoin's price likely rising over the next quarter, but ultimately believe Bitcoin will fall to about $20,000 to $40,000 in 12 months' time. What is your assessment of this survey?
I think it's great that they did it. The fact that Deutsche Bank is polling their clients about Bitcoin couldn't be a better news item to see hit the wires this morning. I think in terms of what the opinions of Deutsche Bank clients might be, I think what's missing from the study actually is a little bit of longitudinality. I'd be interested to know where the same respondents thought Bitcoin would be at this time in Q3 2020, for example. Bitcoin the market has changed a lot since then. So I think these kinds of predictions, it's sort of always hard to believe that Bitcoin could go higher than once it's had a run like it has in the past 2 quarters. But Bitcoin continues to surprise and defy those kind of predictions at times.
Traders like Bitcoin for its volatility, which has led to comparisons to penny stocks. So we have another chart showing year-to-date returns from a sample group of penny stocks that have outpaced Bitcoin. Where did this list come from? Can you talk about some of the companies that are here?
Sure. Yeah. So I was curious to see. I actually got into an argument with Lawrence Lewitton from First Mover at 9 a.m. on CoinDesk TV about whether Bitcoin was sort of penny stock volatile or micro cap stock volatile, and what category we should put Bitcoin volatility in relative to the smallest and most volatile equities in the U.S. And that led to this chart. This is a sort of a random sample, if you will, of some of the most closely watched penny stocks. I pulled it from Bar Chart about at the market open this morning. I looked at the top stocks listed there by daily volume. So there are 5 stocks here. I couldn't tell you a lot about these companies because I didn't know a lot about them before I looked at them. But I think 4 out of the 5 are media companies in one way or another, content producers. And one of them, I believe, is an internet company with most of its operations in China. Like penny stocks, they typically trade below $5 in the stock price. And all of these are on NASDAQ or the big board. None of the over-the-counter quoted penny stocks that I think make up the bulk of that category. In any event, you can see that, investing in pennies sometimes does yield better returns than Bitcoin. This is looking year-to-date returns. And a couple of these here showing outpacing the orange coin. No surprise really to people who've been following these kind of stocks. But certainly for anybody who sort of doesn't really think about that category, might be interesting to look at the fact that there are some investments there that outpace Bitcoin.
All right, so there are some penny stocks out there that can outpace Bitcoin, but let's take a look at the volatility. This next chart is showing Bitcoin is actually less volatile than penny stocks. Tell us a bit about that.
Right. Yeah, well, we know that Bitcoin is kind of the least volatile crypto. compared to even, sort of Ethereum, XRP, or others that are perennially kind of in the large cap category of crypto, Bitcoin is substantially less volatile over time. And as it turns out, it's also less volatile than some of these, which I would, anticipate would be some of the, given their volume, right, might be some of the least volatile among penny stocks, although I wouldn't say that categorically, being mostly ignorant of that category. But as you can see, right, there are some that are less volatile, most that are more volatile. And I think, whenever you're looking at returns, of course, you always want to, compare that to volatility as a type of a risk return analysis. And I think actually the last slide we have, if we have time for it, has a little bit of a comparison. There's the Sharpe ratio between those same pennies and Bitcoin, monthly average, sort of annualized monthly Sharpe ratio of average returns and the volatility over the month. So this is looking at the risk return, like what for the risk and the volatility, how much returns am I getting in each of these assets, Bitcoin versus those 5 pennies? And as you can see, Bitcoin's just in another category in terms of Sharpe ratio, as it is, compared to many equities as well.
So what's better, penny stocks or Bitcoin? How are you going to settle that argument with Lawrence?
I don't know if Lawrence is like a big penny stock fan or anything, but I think it's pretty clear, right, that Bitcoin, you can get a better sort of risk return profile. And given that the kind of simplicity of investment in Bitcoin and the increased liquidity that you see in the Bitcoin market compared to some of these very small, thinly traded stocks, the analysis seems pretty straightforward to me, but I would leave it open to anybody's interpretation.
Definitely a positive argument to make for Bitcoin as a maturing asset class. Thank you so much, Galen, for offering your insights.
Thanks, Christine.
All right, that was CoinDesk Director of Data and Indexes, Galen Moore. And that's it for All About Bitcoin. I'm your host, Christine Lee. Join us again tomorrow at 3 p.m. in New York with special guest to Blockchain.com CEO Peter Smith, as well as 9 a.m. for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.